Welcome back, everyone, and Happy New Year. Let's go ahead and take a look at what moved markets in 2025 and what we expect to move markets going into the new year. Looking back at last year, 2025 turned out to be a strong year for markets, even though it didn't feel calm at the time. And as inflation continued to cool, it really gave the Fed a chance to continue to lower rates in the latter half of 2025, which helped markets immensely. And on the equity side of things, a big driver was continued strength in mega cap technology. Companies like Nvidia and Microsoft were standout performers, largely due to ongoing investments and excitement around AI, cloud infrastructure, and productivity tools. Those large companies carried a lot of the broader market higher, even while other areas lagged at times. That said, it wasn't always a smooth ride. Markets reacted sharply throughout the year to headlines, trade policy concerns, geopolitical tensions, and questions about how long growth could hold up. Still, each time markets pulled back, they stabilized as economic data stayed relatively resilient. And crypto followed a similar pattern. Bitcoin hit new highs early in the year, then pulled back as conditions tightened. What's notable, though, is how much more normalized Bitcoin has become. Large institutions, ETFs, and even pension-styled investors are now participating. Bitcoin is increasingly moving alongside broader risk assets rather than living in its own world, which is a sign of maturity, even if volatility hasn't gone away completely. So what does this mean for 2026 moving forward? This year will likely be less about explosive gains and more about fundamentals. Markets are watching three main things. First, interest rates, whether the Fed continues cutting or pauses if inflation reaccelerates. Secondly, corporate earnings, especially whether large companies can keep justifying their valuations. And third, global policy and geopolitics. A good example of that last point is what just happened in Venezuela. The U.S. raid there had ripple effects across markets, particularly energy stocks, which jumped on expectations of potential oil supply changes. Events like this remind us that markets just don't move on earning reports, they move on global power shifts, policy decisions, and uncertainty. And as for Bitcoin and crypto in 2026, the theme we're watching is continued normalization. We expect more institutional involvement, clearer regulation, and broader acceptance, though price swings should still be expected. And as we move into 2026, discipline will matter more than reacting to every headline you see. Markets will experience volatility, but here at CMG Wealth Management, our focus remains on navigating both up and down markets with intention, aiming to participate in growth while being mindful of risk during market downturns. That means staying diversified, grounded in fundamentals, and positioned to adapt as conditions change, rather than chasing short-term moves. If you have questions about the CMG Wealth Management market navigation strategy and how we approach periods like this for our clients, we're always happy to have that conversation. And on behalf of the entire CMG Wealth Management team, thank you for your trust, and we wish you a happy new year and continued blessings in your journey ahead.